You're watching Business Live on Sky News. We are going to be looking at putting your questions to a panel of experts in the wake of the economic disruption caused by Donald Trump's tariffs. Let's have a look at the top stories, since that is that lots of you want to know about what's happening in your pensions as funds plummet around the world. What about stocks and shares? Is it time to sell or to buy, and where should you put your money? Plus, what effect will all the turmoil have on your mortgages and interest rates? We'll answer as many of your questions as we can over the next 30 minutes. Yeah, very good afternoon on this Tuesday. Welcome to a special edition of Business Live. Whether intended or not, there have already been, of course, huge ramifications following Donald Trump's decision to impose tariffs on pretty much every nation on earth. And there will be very few people who aren't worried about what the effects might be, which is why we've been asking for your questions to put to a panel of experts who will hopefully give you a bit of insight into what's going on and what it all means for you. Delighted to say, joining me today is Anna Macdonald, Investment Manager at Aubrey Capital Management, the Divisional Director for Retirement and Holistic Planning at St James's Place, that is Claire Trott, and the founder of Accountancy, Rachel Harris. A very good afternoon to you all. Well, let's start with an overview of where we're at. Lots of you have been worried about the bigger picture. So I suppose our first question is about whether we are heading for a global recession. And Anna, what is your view on that? I mean, there is concern, isn't there, that the chances of the UK seeing an economic downturn have increased quite substantially in recent weeks?
Well, there's a few ways of looking at this. I think the chances of US recession are definitely increased, and analysts in the US, economists, are starting to price in more than half a chance of a recession in the US. So that's not great for them. Remember that tariffs are going to hurt the country that's importing as well. So the US consumer is going to have to spend more on their goods if they're going to buy overseas goods. So I think the main concern right now is that of a recession in the US. The UK has got off relatively lightly in terms of tariffs because we actually have quite a balanced import-export of goods, and we do export quite a few services, but those haven't been hit. And so the UK could comparatively do a little bit better. We're going to benefit from lower oil prices, and we may actually see the price of our own goods fall a bit because goods that were destined for the US might come here.
And there's lots of comparisons, or there has been, with the financial crash in 2008. Is that a little bit overcooked in the sense that we're not talking here about the fundamentals of the economy, the global economy being in a bad place? This is more about the whims of Donald Trump, who, of course, happens to be the most powerful man on the planet, though.
Yes, this is very much something that is, I suppose, self-inflicted in the US on what was actually already quite a buzzing and strong economy. He wants to upend world order, really. He wants to put politics really above economics for now. So I think that is quite different. I think if we look at banks and we look at companies, their balance sheets are all pretty strong. So I don't think it's going to be the same kind of crisis as that. But he's very difficult to predict. It's very difficult for businesses to make plans and to even think long term at the moment when they don't know how long these tariffs are even going to be in place for, or how much they might vary by.
Yeah, and we're getting, as I say, lots of questions in. People have sent them in via the Money blog on the Sky News app. And Rich is asking this afternoon, will the cost of phones, cars and clothes be impacted, not just here in the United States, but also here in the UK, and how the companies are going to reduce those losses? Rachel, what impact is this likely to have on consumers who want to spend money, who want to buy things, maybe like iPhones, for example?
Yeah, of course. So tariffs, inflation, and reduced consumer spending, which we're also seeing in the UK at the moment, are all things that will push prices up. So global companies may pass those rising costs onto consumers in the UK to protect those profit margins. But prices very often do stabilise once those supply chains have adjusted and the markets have settled back down.
And the question is, of course, we don't know whether they're going to settle down or not. And that's the concern, isn't it, for lots of these businesses, Rachel, is that they are having to deal with a lot of uncertainty. We've seen certain companies stockpiling goods already in the expectation of tariffs.
Yeah, absolutely. And lots of online comparison to the 2008 financial crash. And a really big thing to note here is that 2008 was actually a global banking crisis, whereas this is more of an economic confidence shock. And so today's issues are much more around geopolitics and supply chains rather than a collapse of an entire financial system. But you are absolutely speaking to somebody who is on the front line of small businesses. And, every day we work with nearly 1,000 small businesses who are absolutely on the front line of these changes.
OK, Claire, let's turn to pensions, because actually that is where there is a lot of concern and has been over the last couple of weeks about what's going to happen to people's pensions pots. We know that a lot of pensions effectively are invested in many of these big American companies in particular. We've got a question in this afternoon saying that my pension has lost 10% of its value in the last week alone. Do I just ride out the storm? And this person is 5 years off retirement.
Yeah, I mean, 5 years is still a very long time in the market. So we must remember that. And pensions are a very long-term investment. And in those 5 years, you're not going to suddenly just cash it all in those 5 years and just take it all out at that point in time. I think getting advice and understanding what you've got, how it's invested, and what you can do about it over the longer term to try and mitigate any of these sort of short-term fluctuations when you're coming up to retirement. And when I say coming up to retirement, we're talking even a little bit closer than 5 years. But now is a good time to start planning. We do know a lot of people don't actually look at their pensions at all until the point that they come to take them. So this is actually a good thing for some people, because they're actually going to start considering what they've got and what they need to do with it. And how they're going to secure that at the end of the day. But it doesn't impact all pensions. We must remember that. So your state pension currently is not impacted if you're coming up to state pension age. And if you're in a defined benefit scheme, which is a promise, then it's not going to impact you personally. However, if it does continue to drive issues with the stock market, then employers may need to actually fund more into those to make sure that they are protected. So there's always a knock-on effect to these different things. But understanding what you've got and when you need to access it and what's the best way to access it is really important. So I would still be riding it out at this point, 5 years, 10 years, and even if you're only a couple of years from retirement, there's still plenty of times for things to change. So we say this is just from comments and very recent changes that we've seen this. So there's lots of time.
Sorry, Claire, Stephen's asking, is there a possibility that his entire pension pot could be wiped out to zero? Is that possible?
It's highly unlikely unless he's invested entirely in one stock and the company collapses. I mean, we did see that with some people who'd invested absolutely heavily when they saw markets going down previously, put everything into one stock and that continued to fall. It is very rare. And the likelihood is that if you're actively engaged in managing your pension and you're making those investment choices, you're not likely to do that. And no one who's managing a pension fund as a whole is likely to do that either. And there's lots of things that try and counteract some of these stock market falls, such as bonds that will actually go up when stock markets go down and various things like that. It is technically possible, but very, very unlikely unless you really just shoved absolutely everything into one single stock and that business fails.
And just give us a sense of the importance, if you like, of the stock markets in relation to people's pensions. There'll be a lot of people who don't quite understand how it all works. And also, this comes at a time, doesn't it, when the government here in the UK are trying to get more people, trying to get the pensions industry to invest in the stock market here in Britain.
Yes.
Absolutely, yeah. Sorry.
Oh, no problem. So as Claire was saying, most pensions will have a mix of stocks and bonds in them and some other asset classes. And what tends to happen is that the percentage invested in the stock market will reduce as you get closer to retirement, because that is the riskier area of the market, but therefore it's also the one that over the long term will generate the best returns. And as you near retirement, your pension provider will probably either recommend or will actually, depending on how you're doing it, move you into more fixed income type instruments. So the stock market is important, of course it is, but it's not the only part of your portfolio.
We're also getting a question here, Claire, from Paul. He says, I'm 55. Should I take my pension now or risk waiting, hoping something will improve? As you say, I mean, that's still quite a long time off. Well, I don't know, he might be about to retire anytime soon, but I think most 55-year-olds might have to wait a little bit longer.
Yeah, or if he's lucky enough to actually be stopping work and considering actually retiring full-time and needing some income, then you don't need to take it all out. You don't need to cash it all in. There are great ways to take a little bit out at a time. So you're sort of like phasing into that. So taking a bit of tax-free cash, taking a bit of income in order to just ride out the market in that sense, while still being able to draw an income. If you're 55, you're not looking to take anything until you're 60, 65, and some people work until they're 70, 75 or forever, then there isn't a requirement to access that. There's not a time these days where you're forced to take all your money out or make a single decision. So getting that advice, understanding how is best to extract it. And actually, we see what we call the all-asset approach to retirement. So you may have some cash that you might want to live on for a little bit. You may have some other investments and talk to your investment managers and have those conversations. You do not need to live on your pension when you retire. You can live on other assets if you've got them, and they're a better way to access it, either more tax efficiently or because they're not invested in the stock market at this point in time.
Rachel, what I also find really interesting here is that I've just been talking about how the government's been trying to encourage kind of pension investments in the stock market, but they've also been trying to encourage retail investment in the stock markets. You know, a lot more people in the United States, for example, have got stocks in the stock market. We just are not on the same page on that here in the UK. How much damage will this turbulence have caused to people's confidence, if you like, in just the retail sense of investing in the stock market?
Yeah, of course. I feel like the headline, and lots of us are repeating the same phrases, but again, lots of stocks and shares investments can be very volatile in the short term, but brilliant in the long term. And so again, when markets go through phases like this, we do see short-term knocks in confidence, but actually a pivot on this is that it could be a great time to invest back into the stock market if stocks are dropping and you do have cash to invest.
OK, Anna, we've got a question here from Jesse saying that I've just invested into shares ISA, now lost over £1,000. What can I do? I'm worried about the future.
Well, I'm sorry to hear that has been such an unfortunate beginning to an investment, and the markets have been weak. I think probably the best thing, if you can afford to, is, and I'm hoping that you made this as a long-term investment, is to hang on and to try and reap the longer-term benefits of being invested in the stock market. You may receive dividends on some of the stocks that you have invested in, which will provide you with a little bit of income that can be reinvested. And remember that ISAs, the returns that you will get from an ISA, both the income and any capital appreciation, which will hopefully come over time, are tax-free.
We're also people, again, looking at the stock market and their pensions, Claire. We've got Katie here saying that her husband and herself have got £300,000 invested in stocks and shares, ISAs, and asking, is this the best place for our retirement nest egg? And again, it's that thing about how people might need access to money at different points, and it's quite difficult to work out on a general basis whether it's a good idea or not.
Yeah, I mean, it's one of those things where having a variety of different investment vehicles can really help that. So if the sole thing you've got is a single stocks and shares ISA, and that's where all your pension is, and you're still working, then there is always the option to actually move some of that into a pension rather than into the ISA. It's taxed differently, but what you do get is you get a tax incentive to invest in there in the first place, and then therefore the amount you're starting with is higher, but you will be taxed on 75% of that when it comes out. So it's a kind of a tax deferral. So having a single point just for your retirement income is generally not advised. It's something that you would like to do to use a different tax wrapper, so you've got those options to be able to take money out from the right place at the right time. So some cash, some ISA, some pension, and utilise all those different things. But again, I don't think it's something you want to act on very immediately and go, I've got that £300,000, I need to take it out, or I need to do anything with it. If you don't need it today, then leave it be.
Rachel, here's a question that we get a lot, which is effectively people saying they've seen similar falls in the markets after COVID. Now again, there's been previous shocks, obviously. And they're saying that there's actually very little profit or lots of uncertainty for investors, and yet fixed-term cash savings are at 4 to 5%. So why are people being told that cash savings aren't a good option and actually the stock market might be better when there is that volatility, if you like?
Of course. So cash is a very low risk and useful strategy for short-term goals or emergencies. But cash over time can be eroded by inflation, meaning that you will lose your purchasing power and the inflated version of that cash will increase. So investing, whilst it does carry risk, can actually outpace inflation over time. And the key when we're looking at investments is to create a portfolio, which is where you're balancing those risks over time.
OK, and just Anna, very finally on this little segment, someone's asking if it's a good time or not to buy US dollars. Sterling was quite strong against the dollar about a week and a bit ago. It's fallen back slightly. What's your thought on whether now is a good time to buy the dollar?
I think trying to predict currencies is incredibly hard, slightly above my pay grade. So I think unless I wouldn't actually have a strong view on that. I think that there are plenty of people who say that the dollar is going to be subject to weakness if their economy goes into recession, and also if there's just a general turning away from using the US financial markets as a kind of safety cushion, and you know, maybe there will be some countries that will not be buying lots and lots of US government bonds because they might be looking to diversify away from the US.
OK, Anna, Claire, Rachel, for the time being, stay where you are, because we're going to have more of your questions coming up on Business Live about how this market turmoil may well affect your mortgages and your house prices. We will be looking at that with more of your questions coming up in just a couple of minutes. Do stay tuned. It's Business Live here on Sky News.
In the last 5 years, more than 13,000 farmers have left agriculture in the UK.
Is it going to be viable for the future?
No farmers, no food! The frustration, the anger, the fact that so many of them are at risk of going bust has now become too much.
You've got to keep hope because one day it's going to be okay.
I'm Dan Whitehead, Sky News' West of England and Wales correspondent.
It's scary what's happening in the country.
It's the illegal migrants that we don't want here.
How difficult is this to police tonight? Off the scale.
Having the police speak to us so starkly right in the middle of the riot showed just how serious the situation was.
The water on board the barge contaminated with Legionella bacteria, an outbreak that was first revealed by Sky News.
There have been questions for months over whether the support offered to asylum seekers on the Bibby is sufficient.
A cruel place to put human beings.
From busy cities to rural communities, we spend every day reporting on how big decisions impact real people.
The last smoke and steam rises into the sky above Blast Furnace 4.
Today is a day in history. Remember Talbot?
The closure means more than 2,000 job losses.
It just seems madness.
It is a highly contagious infection. South West Water did apologise again.
This is the Revenge Porn Helpline.
They're helping terrified victims.
You've been a victim of a very common type of online crime known as sextortion.
We're making things better for people.
Stonehenge became the latest victim of Just Stop Oil.
Now I can say I've been to the orange Stonehenge.
Sky News, get the full story first, free, wherever you get your news.
Sky News, get the full story first.
Is this now all your territory?
Yeah.
The battlefield is outside the barricades. We are in the middle of a forest, in a jungle really, and they're attempting to keep these men alive. I'm Stuart Ramsey, and I'm Sky's chief correspondent. It's really dangerous. Many people have died riding it.
We are under
Israeli military restrictions in terms of some of the things that we can film, but it's important to be in there. What a slow drive for the president as he approaches his golf club. 4 more years! Free wherever you get your news. I'm Mark Stone and I'm Sky's correspondent based here in Washington, D.C. We're rolling.
Welcome to the world.
Our new podcast, starting now. It's very exciting. Every week, we'll be reporting from the world's trouble spots.
We get to hold those in positions of power accountable, and we get to ask the questions that the audience, the listeners, want to know about.
And that's why it is so important that people tune in, come along for the road, come along for the journey. It'll be fun.
I just took a shower above the couch. You know why? Because this is the Emirates A380. Fly Emirates, fly better.
A very welcome back to this special edition of Business Live. We've been asking and answering your questions on tariffs that you've been sending in to Sky News on the Money blog today. Thank you for your questions. Lots of them. Delighted to say still with us is Anna Macdonald, Investment Manager at Aubrey Capital Management, the Divisional Director for Retirement and Holistic Planning at St James's Place. That is Claire Trott, and the founder of Akanshi, Rachel Harris. Very good afternoon again to you all. And just let's start with the actual markets themselves. We just saw them there. They have somewhat recovered today here in the UK, in Europe and in the US. They've not made up all of the ground, but a bit more positive.
Yes, and something we look at is volumes as well. And the volumes are quite strong today, which means there's a good amount of market participation here, which is a good sign, but not entirely unexpected after 3 days of really quite dramatic falls.
Yeah, dramatic indeed. Let's talk about, if we can, mortgages, because this tariff war might kind of have an impact on people's mortgages and maybe even house prices as well. With this question from Oliver saying, I'm currently midway through purchasing my first house. Could house prices drop off significantly if a recession hits, and could interest rates shoot up? That's from Oliver. Claire, what's your view on that? What the impact may well be on houses and mortgages?
Well, I mean, it's difficult to say. I mean, I should say I bought my house in 2008, just before the previous crash. I paid my mortgage off just last week. So it's more about when you're selling it than necessarily when you're buying it. That's the issue here, which I think is a really important thing to think about. Again, like pensions, long-term investment, unless you are sort of buying houses to flip them. So we may see changes. I think there's been some noise that we might see interest rates change a little, but there doesn't seem to be a huge amount that everyone's talking about that's going to be sudden changes to stop you suddenly buying a house that you're midway through purchasing.
And Rachel, just on that, we've also got this question about from a viewer saying, my mortgage is due for renewal this year. How do you expect the interest rates to be affected? What's your view on where we may well end up, given this uncertainty?
It's worth saying, if you are looking to buy a home, very often when we see economic situations like this, very, very often...
Guys, so we're just going to stop you there, Rachel, if we can. Prince Harry is leaving the Court of Appeal today. He has been there to dispute the decision to downgrade his security arrangements while he is in the UK. He's just leaving. We're just getting those pictures of him leaving there in central London. You may remember, the Prince's taxpayer-funded protection was changed in 2020 after he stopped being a working royal. The argument from his lawyer is that he'd been singled out for different, unjustified and inferior treatment. but the barrister representing the government told the court the decision that Harry's UK security would be considered on a case-by-case basis was rightly taken. So that is Prince Harry leaving the Court of Appeal there after those arguments were heard in court. We are expecting effectively this appeal, if you like, to continue tomorrow. And we will have more on that case with Mark Austin on the News Hour. That's coming up at 5 o'clock. Just before we do go on Business Live, I want to thank our three guests, Anna, Claire and Rachel, for answering your questions. That is it from me, though. I'm back at 11:30 tomorrow morning. Join me then. Stay tuned to Sky News. Goodbye.